You know this little piece of plastic in your wallet? It's not just a convenient way to buy stuff. It's actually a key to an instant global line of credit. When you tap this card, your money doesn't move at all. Instead, what you're really doing is kicking off this worldwide financial sprint that decides, in just seconds, whether to loan you money. So come on, let's pull back the curtain and see what's really going on behind the scenes.
Okay, so here's the number one thing you've got to understand. Your debit card uses your money. A credit card, that uses the bank's money. Every single time you swipe, you are taking out a loan. It is, no joke, the ultimate short-term loan. And in the next few minutes, we're going to follow the money, we'll uncover the hidden fee that fuels this whole system, and we'll expose the one lethal trap that turns tiny little payments into billions for the banks. So what really happens in those 3 seconds between when you tap your card and you hear that satisfying approved chime? Well, it's not magic, that's for sure. It's more like a silent, lightning-fast conversation between 4 key players, and it's all happening before you can even get your card back in your wallet.
It all kicks off with you and the merchant, right? Your swipe sends this encrypted data flying over to a card network. Think Visa or MasterCard. They're basically a secure messenger, and they instantly forward that request to your bank, the one that gave you the card. Your bank then asks 2 super important questions. Do you have enough credit? And does this look legit? Once it gets the green light, an approved signal zips all the way back, and boom, the receipt prints. All of that in the blink of an eye. It's wild.
But here is the first big secret of the credit card world. The store you just paid, they don't actually get the full amount. No, a small slice, usually around 1 to 3%, is taken out as something called an interchange fee. Now, this tiny fee, it's literally the engine that powers the entire system. It pays for the networks, all the security, and yeah, it pays for your airline miles and your cashback rewards.
All right, so fast forward a bit. Your statement arrives in your inbox. This moment, right here, is the critical fork in the road. It is the single choice that separates building wealth with a credit card from falling into crippling debt.
See, every credit card offers you this thing called a grace period. It's usually about 21 days after your statement is generated. And here's the magic. If you pay your full statement balance within this window, that short-term loan you've been taking all month long costs you absolutely nothing. 0% interest. You've just used the bank's money for free, you've collected rewards, and you've built up your credit. You win.
So this is the choice. Pay in full and you walk away scot-free. Or you can hit that really tempting little escape button the bank offers you, the minimum payment. I mean, it looks small, it feels easy, but the second you choose it, you've just crossed a line into what I call the interest zone.
And this is where the banks make their real money. Once you pay anything less than that full balance, the game completely changes. 2 devastating things are immediately set in motion, and they are both working against you.
First, bam! You get hit with a sky-high annual percentage rate, the APR. We're talking 20%, often way more, and it's charged on your entire remaining balance. That free loan you were enjoying, it suddenly becomes one of the most expensive loans you could possibly have.
Second, and honestly this is the real killer, that interest, it compounds daily. This means that every single day the interest is calculated and then added right back to your balance. So the next day you're paying interest on your interest. It is a trap. It is mathematically engineered to make a small debt grow and survive for years, sometimes even decades.
Let's put this in real terms, okay? Imagine you have a $5,000 balance. If you pay it in full, it costs you $0 in interest. Simple. But if you only ever make the minimum payment, well, it could take you over 15 years to pay it off, and you'll end up handing the bank an extra $4,500 in pure profit. That tiny little payment, it's their entire business model.
But now you know the secret. You know how the whole system works, which means you know how to make it work for you. A credit card is one of the most powerful financial tools you can own, but only if you know how to master it.
So the rules for winning are actually pretty simple. You have to treat your card like cash. It's a payment tool, not extra income. And here's the golden rule. Always, always pay the full statement balance before the due date. No exceptions, ever. If you stick to that, you get a 0% loan, free rewards, and a fantastic credit score. You stay out of the interest zone, and you make the system work for you. So the next time you get some cash back or you book a flight with your points, just remember where that money really comes from. It's funded by the interest that's paid by all the people who fall into that minimum payment trap. Master this one simple rule, and you'll never be the one paying for everyone else's rewards again.